we are presenting 5 easy activities you should be doing with your bookkeeping or accounting clients to start your advisory service and start today. Presented by myself, David Siemens. Now, without further ado, we will start. I am your pilot today, David Siemens. I'm a retired CPA accountant and business advisor, company coach to small and medium enterprises for over 35 years. I am co-founder of Elements.app alongside my very youthful partner and technology wizard, Ash Guy. In a recent survey, we asked bookkeepers and accountants what they hated about their work. 86% of them said that they were being seen as the bearer of bad news. Some bookkeepers and accountants get very deeply involved with their clients. Even though they aren't involved with the day-to-day operation of the business, they still feel terrible about passing on news about less than expected profits, monies owing to statutory authorities, or just cash collection. Further, data from the Institute of Certified Bookkeepers annual survey report found that 35% of bookkeepers were not satisfied with the financial return of their business in the year ending 2017. And they'd be looking for ideas to improve their turnover in following years. In the artificial intelligence-driven world, bookkeepers and accountants are being told that they are like dinosaurs, soon to be extinct. To avoid this, they are being told they should take on an advisory role. Well, that's all well and good, because there's a lot of talk about becoming an expert on apps in the various marketplaces. But this is very short-term and limited. Be honest, why would a client pay you when they can just watch the YouTube videos attached to each app, read the referrals, and think about it a bit and make their own decision? There are not too many $10 a month apps that will continue to make you money. Everyone is seeing improvements in technology. Technology is able to provide real-time information direct to the business owner. So why go through the bookkeeper or accountant? I don't think anyone could argue that the traditional bookkeeper, the reconciler, the filer, the paper shuffler, the traditional bookkeeper as we've known them, well, they're going to be going away soon. But I take the view that automation is not making accountants and bookkeepers obsolete. Far from it. Automation is providing smart accountants and bookkeepers 2 tools that are essential for becoming better advisors. More time, more data. I quote from a recent HubDoc article, which stated that with more time and more data on their hands, accountants and bookkeepers are enabled to provide proactive advice. Repeat, proactive advice. Furthermore, recent data suggests that human advice will remain in demand even as automation takes over. For example, we can all think of examples, but a 2017 survey by Accenture found that a majority of investors preferred a mix of robot-generated robo-advice and human advice, indicating that people will still desire human connections in an artificially intelligent-driven world. In other words, providing proactive advice won't just be effective for increasing your value and longevity as an advisor. It's really what your clients want. Humans and robots can exist symbiotically and automation can increase your value as an advisor. So, I believe that the smart bookkeeper or the accountant is perfectly placed. They have a solid understanding of accounting. They understand the fundamentals of how a business works. More importantly, they intimately understand how their clients' businesses work. And they have the information available to them to maximize the return on any investment in technology. But nobody is telling you how to put this sort of thing in place. Well, we're going to give you 5 easy actions to start your advisory service. So today, we'll be talking about clarifying the owner's role for the owner. We'll be talking about action number 2, getting a handle on the numbers. Action number 3, uncovering issues, both positive and negative, that are affecting sales. Action number 4, creating a focus on A and B clients. And action number 5, creating regular customer engagement. Might be all a bit airy-fairy to you right now, but bear with me. And finally, we'll give you an indication of what putting these actions in place should mean to your income stream. So we're going to be talking about how to price your advisory services. We don't mean to get into dictating anything that's going to contradict any official areas, but we're going to give you some indication of what you're worth as an advisor. And at the end of the webinar, I'm going to have a special offer with a kick butt guarantee for all attendees. So hang around. Let's get started. I want to say something right away. I'm going to be using the term business owner a lot, but I'm assuming you're a bookkeeper or an accountant with your day-to-day operations, maybe some staff, deadlines to meet. So when I use the term business owner, I am referring to you as well. Okay? I'm referring to you as well. So you've got to adopt the ideas before you can push them on to your clients. If you don't walk the talk, your clients are going to pick it up. So some business owners, I'm referring to you, as well as your clients, may have come from a technical background. The business owner is happy playing with the latest technology, the new equipment, the latest toy, analyzing the books, talking to staff, anything but setting the direction and the vision for the business, which dictates the sales and marketing. It is the business owner's business, and they are the only one that can set this direction. So you have to be aware, and you have to make a business owner, client, aware that they must be the business owner. That's the role they have to fulfill. So that means working in the correct areas at the right time. The bookkeeper accountant understands that there are only 4 things that a business does: sells goods and services, gets paid for goods and services, buys goods and services, and pays for goods and services. Traditionally, the bookkeepers and accountants have limited themselves to the last three areas: reporting on where the money has been collected and how it's been spent. In a recent ad hoc survey that I did, I looked at a website advertising the services of a certain group of bookkeepers. And overwhelmingly, I found that they were saying, we tell you where your money was spent. We'll talk about this further later on. But management consultant, author, and educator, the late great Peter Drucker, said, nothing happens until someone sells something. Making selling goods and services the most important part of any business. And that is where the business owner must spend most of their time. Now, I'm going to be talking from experience here. I used to consult with clients. So do this for yourself and some of your business owners that you want to take on as clients, and help them see where they're spending their time. First of all, remind them about the role and explain the four areas of where business operates. Ask your business client or yourself to keep a diary. Every 15 minutes, they jot down what they've been doing. After a few days, and it only has to be 3 or 4 days, it happens very quickly, they can see that they're not managing, setting direction for the business, and thus sales and marketing may not be suffering, but they're not growing. The business is not realizing its potential to any stretch of the imagination. It becomes very clear very quickly that the business owner is absent. So we're going to make this a bit of fun. Now that they know where they've got to be operating, we're going to give you the handles. We refer to them as handles. The numbers that the company needs and the business owner needs to be talking about. So just to review, your first action is to clarify the owner's role for the business owner. Next time you sit down with your client, explain to them the 4 things a business does, explain the difference between sales and marketing role and the support roles: compliance, accounts payable, debt collection. Split the tasks in their day down to selling tasks and support tasks. Show them where they're spending their time. Discuss how they can delegate more of the support tasks to other people in the business or outsource them. Do they have a personal assistant? In this day and age with virtual PAs, you can have a pretty decent secretary for not much money at all. Repeat this activity every month. Okay, you're starting to take on the role of the advisor. You have to maintain contact on a regular basis. So the goal of this activity is to transition the business owner into getting them to spend more of their time on key value creation tasks, like sales and marketing, direction setting in the business. Now, a bit of fun here. Action number 2, give the customers numbers they can get a handle on. Okay. Traditionally, the bookkeeper accountant sits down with the business owner and says, well, this is where we're going. This is the money we owe. This is a profit and loss. And they notice a glazed over look on the business owner's eyes. the business owner really doesn't care or understand, because they know that this compliance work is not what's driving the business. The bookkeeper or accountant, on the other hand, knows when the average number of invoices are down. The average sales value seems to be slipping a bit. And some of the names that they've seen on invoices for the longest time aren't there anymore. They have a gut feel for these issues, but have never known how to quantify these indices, what they meant, how to react. So the bookkeeper or the accountant dodges the whole issue. What they should be looking at is what we call the sales growth formula. Revenue equals active clients times average sales value times average number of transactions. At Elements, we call these handles. All this information is in any accounting or point of sale system to various degrees. Using this formula, the sales reconcile to the financials. So now the accountant or bookkeeper knows exactly where these figures are coming from and what they mean, because they reconcile back to the hard information. Let's take a simple example. Okay, let's see how the sales growth works, looking at it from the perspective of the bookkeeper or the accountant compared to the business owner. Okay, so we're going to see the formula, and we're looking at it from two different perspectives. You're probably getting the idea. I'm trying to get you as the advisor to talk the same language as the person who's listening to you. Yesterday, our business owner had one customer who spent $1 on one visit to the store. So what shows up on the P&L is $1. But today, the business owner had two clients. Each of them came in twice. Okay, do you wonder why McDonald's opens up for breakfast? There you go. But today, these clients spent an average of 50 cents each, making for a total revenue of $2. Interesting. Now, let's see what you see as a bookkeeper or accountant. Okay. $1 yesterday in sales, $2 today turnover. Things have doubled. Isn't that cool? You make sure that the debits, the credits all work, and they're showing up on your banking statement, the P&L, the balance sheet. Great. You reconcile the bank accounts so that accounts like undeposited funds and all these other things reconcile. The credit cards, payments reconcile, all this sort of stuff. You do a quick cash flow to work out if the expenses and liabilities in the business are covered. You probably don't allow for any payment to go to the owner. Maybe you do. And for Australia and some other places like Canada, the GST liability is correct. All good stuff. Sound familiar? But put yourself in the shoes of the business owner. What do they see? The business has doubled the number of clients. Great, celebrate. The business doubled the number of sales. Also great. But hold on. The average sales reduced by half. Two good things, one not so good. So what's happened? What happened to the average sales? That's what the business owner will see. He doesn't see the rest of those things. That's all good news. He's happy, but hold on, sales have dropped by half. And finally, he thinks, will he get paid this week to maintain his lifestyle? The second action that you as an advisor take, two different perspectives, is always to talk about actionable numbers or handles. Each time you're going to present or discuss any numbers with your client, break down the numbers into the 3 actionable things that they can work on that make up revenue. Active clients or customers, active sales value, and the average number of transactions per customer. Discuss these numbers in the context of day-to-day operation and build strategies around how the business can improve on each of them. You're now becoming an important advisor to the business. So action number 3 will be to uncover the issues so they can be solved or promoted before they happen. Become proactive, not reactive. That may sound a bit weird. Let's go on. I'll explain it. Look, you're an accountant. First thing you're going to do is say, oh, I can do all this on a spreadsheet, and oh, I can set this up, and I'm sorry, I'm one of you. I know that human beings and spreadsheets carry on an affair for about 6 weeks. Business owner, even less time. And after that, it's all twitch word. Okay. You could graph all this information on a spreadsheet and analyze the handles of number of active clients, average sales value, and number of transactions historically. The bookkeeper or the accountant can discuss these numbers and help their client to predict when they may happen again and what action would be required to benefit from or to avoid the outcomes. Make sense? So I've put some arrows into place here. Now, if you were the advisor, you'd turn around and you'd say, well, this is the movements that have happened, and you can explain them on the graph, or you can see how effective the business owner has been. However, some movements aren't readily discernible. They kind of sneak away. You don't see everything. Okay? What's going on here? Okay, these jump out. Again, human beings and spreadsheets. Maybe somebody got slack, didn't get the definitions right, hit the wrong button on the calculator. Now you can start strategizing with this data, with this information, to see what sort of effect it's going to have on the revenue. So the top 3 lines there multiplied out give you the revenue. So you can see movements up and down. We saw it in the last slide. 2 handles actually increased, doubled, and 1 went 50%. Now, if you only looked at revenue, you get the wrong picture for what was happening in that business. So as an advisor, you're now going to set up targets and processes looking forward as compared to the bookkeeper or accountant who looks backwards. You're going to say to your business owner, well, let's try to get the average sale up from $2 to $2.20. That's a 10% jump. And that's going to flow right through to the bottom line. Okay? Everything else remaining constant. Now, the business owner is sitting there thinking, wow, the bookkeeper or the accountant is becoming a trusted advisor. And the business owner wants to see them more than a couple of times a year. What is it? 4 times for the bass? Big deal. The business owner wants to see their advisor quite possibly once a month. Things move much more quickly in sales, so the opportunity exists to engage far more often. So in summary, uncovering the issues. Next time you look at your client's handles, graphed over time, identify any points where there's a sudden increase or drop in revenue, or the handles themselves, the component handles. Analyze it. Discuss it with your client. What happened there? Of course, if it's a negative movement, how are we going to avoid it in the future? But if it's positive, figure out how to repeat and maybe even accentuate the process. Action number 4. Focus on the businesses with their best client. Show me the money. The bookkeeper, accountant can focus on the things that actually make money and ensure that the business owner is informed. By reviewing the lifetime value, the bookkeeper accountant can advise on ABC clients for their client. It is well accepted, and there's lots of literature. I'm not inventing this. And if you look in our bibliography, there's a number of books there that you can read and understand this deeper. But it's well accepted that 20% of clients generate 80% of income. 20% of clients generate 80% of income. Furthermore, this 80-20 is what we call fractal. So if you drill down, you get the same thing. So 20% of the 20% of clients, in other words, 20 times 20, 4%, generate 80 times 80%. So that's 64%. So 4% of clients will generate 64% of income. That is our A column there, the green column. Next, 16%, the remainder of the 20% minus the 4% gives you 16%, will generate 16% of income. That's the blue there. That's your B client. C clients are the 80% of clients that generate 20% of income. Let me repeat that. That's the 80% of clients that generate 20% of income. The bookkeeper accountant, once they see who this is, can advise their client which ones of their clients to focus on. The business owner would certainly like to avoid the expensive time wasters and bottom dwellers. I think one thing you could take away from this webinar, and only 20% of you will absorb this. The other 80%, it's the same thing. You won't absorb this. Only 20%, but you'll go away and start applying this. And one of the most interesting things I've ever noticed is that when I give this talk, the challenge I throw out is, as the bookkeeper accountant, can you figure out the costs incurred by the business for these 80% of people who are generating 20% of income? And it's a bit disconcerting because oftentimes you find that more than 80% of the expenses are being incurred to carry these 80% of people generating 20% of the income. More than 80% of the expenses to generate 20% income. How quickly could you turn around the business by doing that exercise? Finally, imagine where the reports on the sales handles and 80/20, which I've just shown you, are included when you present your P&L, your balance sheet, and your cash flow statement. These handles reports and the 80/20 reports, growth and focus we call them, become the reason for discussion. And you'll see yourself, because the sales figures from the handles equals the income on the profit and loss. So the profit and loss becomes the evidence of these reports and how effective they're working. Same thing with the balance sheet, and especially cash flow statements. I invite you to look at some of our blogs discussing how the industry has an oversight when it comes to talking about cash flow statements and looking at sales revenue. Fascinating. So, in summary, action number 4, focus the efforts on the best clients. Maybe this isn't quite a summary, but if you still want to do this all manually, you can run a report in any accounting system that shows the total of how much clients have spent with your client in a set period, probably the last 12 months. I use in the QuickBooks Online income by customer, and I add a percentage column, percentage of sales, and I drop it into a spreadsheet, and I can determine the top 4%, the next 16%, and the remaining 80% pretty quickly. Getting back to the summary, the top 4% of clients now, the A clients, you're the bookkeeper accountant. You have to work with your client to ensure that they are offering exceptional service to their A clients, and that the A clients continue to buy. The A clients are the popular ones, the lovely ones, you want to work with them ones. They're tremendous. The next 16% of clients, the B clients, you might be able to move them up to be an A clients, but at very worst, just keep them happy. Don't do things they don't want to know about. They're happy with you. They just might not be over exuberant about you. That's all. But they're great. They're the rock solid ones. The 80% of clients that generate 20% of income, the C clients, make a management decision on them. You might want to fire them, bundle them up, sell them to somebody else, because to somebody else they will be A and B clients too. So start looking at where the money is being spent. And I repeat this over and over again. Make this happen every month. So that leads us into point 5. Action number 5, engage with your clients on a regular basis. They're starting to need you. They really want to see you. They want you to talk about things and how things are going. You've got the figures at your fingertips. And maybe they're looking at these reports already as well. So they've seen things and they want to talk with you about things. Wow, you are becoming an important person around here. So, in summary, engage regularly. Schedule an appointment with your customer in which you sit down, or nowadays, of course, do it online, and do a full progress review every month. See where the movements are. There's going to be movements in your handles, and there's going to be movements between your ABC clients. Figure out what's happening. Elevate the handles information to the same status as the financial statements. Discuss what happened since the last review and what's coming up. Keep notes on what you talked about. And the fun part, when your customer achieves these goals and you see these positive movements, send them a congratulations and share a bottle of wine. This is what being an advisor is all about. Your client will want to see you more often. Now, is it worthwhile doing this? Okay. Again, lots will sit there and go back into their shell, their safety cave. But you're being a consultant, and by doing what a consultant does, you can have the rewards and satisfaction of being an advisor. And you price yourself accordingly. Don't be afraid to price a bit higher. You're more valued to the business. Clients are happy to pay for good advice that helps them to generate income. Remember, as a bookkeeper accountant, you used to be just a nasty overhead that the business owner just thought they had to cop. And they really didn't understand what you were doing anyways. In our travels, we found that some people who use these ideas that we've put out, they're making about $300 to $500 a month. They're doing it on an ad hoc basis. A general advisor, which is a bit more experience, a bit more traction, a bit more time with the client, well, over time they're charging $500 to $1,250 a month. And finally, an advisor who really understands the industry and is now at a point where they're focusing on a few clients and not lots of clients, is making $1,250 to $5,000 a month per client. So let's just go over what we've covered. To review. Action number 1, clarifying the owner's role. What are they doing? Are they doing the right thing at the right time? Action number 2, work in terms of actionable numbers, handles. Action number 3, uncover the positive and negative issues affecting the business. 4, create focus on the A and B clients. 5, maintain regular customer engagement. Finally, charge more and keep repeating it. Look, there's really nothing to stop you from doing all this stuff on spreadsheets, as I've mentioned before. Your clients will appreciate the numbers and the graphs that any spreadsheet is capable of generating. Great. But clients generally don't want to pay you if you're not seen to be doing the traditional role of a bookkeeper or an accountant. And playing with spreadsheets, is that a traditional role? Clients generally only want to pay for the time they think that you spend on their books. So you want to have something set up that runs automatically. I mean, that's what the online accounting packages do nowadays. Bank feeds, they memorize it, they code up a transaction, throw it into the account. You never even see it. Okay, forget about reconciling and coding and all this sort of stuff. It's passe. So you've got an accounting package that does all this. Why not a sales analysis package? So unlike financial reporting, Elements.app generates income for your client. We do recommend that you use it first for yourself and see what revelations you experience. And then you'll realize that there's value in this thing. Your clients will happily pay for the information because the data pays for itself. They can work on it. It will shape their business, moving them forward. Just to digress, as I said at the start, I'm a CPA myself, retired CPA. Is it easier to tell your client your budget of sales is $1 million next month, or is it easier to say increase the average value by $20, or make cold phone calls to get more active clients to get your budget? I'll talk about this a lot more, but I think we're even rethinking the idea of what a budget should be with these concepts. So you see, at Elements.app, we provide the education in terms that bookkeepers and accountants are familiar with. I don't think I explained that last thing well, but that's what I'm trying to say. I talk your language. We show you how to introduce the benefits of Elements to your clients. We show you how to charge for the more features and the more benefits that you're providing every day. So what I'm going to do is tell you, go to Elements.app and open an account. There's a free account there. Load in a data file that you're familiar with, probably your own. But there's nothing saying you couldn't use a client. I mean, I didn't tell you this, but you're not going to wave a flag and say you've used their data as test data. I mean, and trust me, we don't know what figures go in there. It's all encrypted. At Elements here, we follow all the rules, so we don't see what those numbers are. We don't know who your clients are. So you can load a data file you're familiar with and click around and get an understanding of what it's all telling you. And if you need help, refer to the blogs that I continue to develop myself. Build a list of simple actions you could provide as part of your product. Okay? Now, if you're working on your own data file, write down what you want to do, what sort of information you want to keep an eye on, what you're going to be looking at on a regular basis. You can use everything that I've suggested here, but I'm sure some of you have got some ideas and gone, wow, I could do that with this information. Great. You're becoming a valued advisor. So generate a list of things you're not going to do anymore. As a bookkeeper, I've seen clients ask them to pick up the coffee as they come in to work. Yeah, maybe it's time they got a personal assistant to do that. Because if you're going to do the menial stuff, you're going to continue to be treated as menial and paid accordingly. So that's it. Reach out to, if you've taken a data file and looked at it and it's yours, you get some ideas. But now it's time to get into the real game. Pick up another data file, attach it for a client that you want to work with. Put it on a tablet. Get the information right there, easily visible. And then have a coffee with that client. Talk to them about the information they're getting from Elements. And then ask them to politely if they can see value in this, because you're going to put up your price. If they say yes, you've got a client. If they say no, just ask them why. There's no trouble. Thank them for their time. After all, they're still your bookkeeping client. We haven't said cut them off. They're still your bookkeeping client. And you're going to be doing only bookkeeping for them for a little while longer. So try another client. And you'll really be surprised. It's, in all my years of experience, I gave up predicting who would come on as clients and who wouldn't. There were clients I was dead certain they would come and be my client, and they didn't bite. They never did. And other ones I thought, there's no way they're going to come on. Well, they came on tomorrow. Okay? So just keep going until you get a client who says, yep, let's start putting this into place and implement it. Improve your skills, build on your information, and then get more clients. Repeat, repeat, repeat. So what you're going to be doing is building better businesses, yours and theirs. Well, first of all, I'd like to thank you for your time, if you're still here. And for people who are interested in this, I'm going to be talking a little bit about what Elements is about and where it's going to. So you might be wondering how you'll take up all the additional content, concepts, and information offered in the Elements product. Elements is a very young product, but it is based on well-established and proven principles that have been out there for years. We've only just introduced the smarts and immediacy of technology to existing information. And isn't that what computerized bookkeeping really is? I used to work on cards and put numbers on these cards. Now we just key it into a computer and it does all the work for us behind the scenes. And that's all we've done with Elements. I have spent 35 years studying these concepts. There's no way I expect you to do that, and nor do you want to do it. So we'll be running webinars and Facebook workshops to fill in the gaps for you, to give you the high points. Of course, if on your own time you want to dig deeper, go for it. But we're going to get you enough to grow your business quickly and get clients that you're happy with. We offer 24/7 contact. So you'll be able to talk to Ash, the developer, or myself anytime via the app called Slack. So you send us a message. Of course, we might be asleep. It might be a few hours to get back to you. But 9 times out of 10, we'll come right back. Ash will talk to you about developments that are going on. I'll talk to you about business practices. You'll have input on how well the new features that we introduce work. Plus, you'll give us input on features that you'd like to see included. So it's just like any other software app. You will get first look at significant new release features. And should you not be happy with Elements within the first 30 days, we'll refund your subscription payments in full. No questions asked. You have a golden opportunity to be on the ground floor of a new and exciting business advisory platform. So, for attendees of this webinar, we're offering a sensational lifetime 30% discount on the Elements package. This is Elements Growth and Elements Focus and the yet to be released Elements Rhythm at 30% less forever. No matter how the prices go up, you will always pay 30% less. No matter how the features come out and we charge for them, you'll get it for 30% less. So starting on a basic package, when you start charging out for your services, your clients will be costing you $13.86 per month. If you put more clients on, of course, the price of the clients go down. Now, at the very least, for that $13.86 per month, you should be charging $300. We'll be talking about these sort of things in the future. But that's the sort of returns that you should be getting as an advisor to provide your clients with innovative, real-time sales and marketing data and analysis. So, following on, what you should be doing now is subscribing to elements.app. Click on here, and you'll see there's your Start Now for Free button. Get stuck into it.